Hello, YouTube. I promise you I am not doing this on purpose. Every quarter, financial quarter that I have reported on InvestView iGenius, the filing has looked worse, and this is no exception. Today, the 13th of November, 2025, InvestView iGenius released to the SEC its third quarter filing, that is for the months of July, August, and September. It was bad. They showed a decline in practically every financial category year over year. However, they still have a lot of stuff on their balance sheet. It's basically cash, but that masks some very bad news that I'm going to try to explain. They also announced some early stage initiatives, some of which are not so early stage. For example, we're going to speak more about their health and wellness products company, which they purchased for $1.8 million over a year ago and have yet to officially launch. Kind of a confusing story. And also to keep their share price from going to zero. It's at 3 cents per share as of this date. They are buying small amounts of their shares back regularly. Okay, for the entire company of InvestView, their gross revenue fell 24.3% year over year to $9.5 million. Their net revenue also shrank a comparable 22.9% year over year to $9.1 million. That is a net loss of $900,000. Their operating cash flow also shrank by $600,000. Okay, year to date, their net revenue was down 28%. Net income was down $1.1 million, and their operating cash flow was also negative. On their balance sheet, they do show they've got $15 million of cash. They also hold Bitcoin, as a lot of companies do. I confess I don't understand this move well enough to explain why $3.8 million of Bitcoin on the balance sheet is doing InvestView iGenius any good. The share repurchase. It turns out of the total number of shares that they have, which is in between 1 and 2 billion shares outstanding, they've reduced the number of shares by only a little more than half of a percentage point. At a discount price. It's doing the job somehow. The price isn't going to zero. They have not been delisted from the OTC, over-the-counter QB market. So perhaps it is working. You can't say it's not working. Now, here's the main point of this presentation. iGenius itself. That revenue was $7.1 million. That is down year over year, 37%. This is something like 3 or 4 quarters in a row of double-digit declines, really close in the 30s percent. This is beginning to bottom out. They've also got Renew Labs, which they've generated, now a sizable percentage of their overall income, $1.1 million. But the question is, who are they selling it to? They're not selling it to iGenius reps. My Life Wellness is still its placeholder page. And for about a year now, they've been saying they're going to open soon. And that hasn't happened. Remember also about a year ago, they bought a registered broker called what they're going to call Open, or it was Open Cash. And they say that it's also supposed to start in the fourth quarter, of which there are 6 weeks left. I'm not holding my breath. Then iGenius did something truly weird. They invested $1.25 million in a venture capital VC fund that is aimed at early stage nuclear mini reactors, which are, I'm not sure any have been built. I don't think any have been built. The point is this: in the big picture, the amount of computing power that artificial intelligence is going to require in the future is almost certainly going to require that nuclear reactors are the ones that have been dormant are brought online, and or new ones are built. So now, even though it's very small, iGenius has exposure to the modular energy slash AI market. But what is this? This is likely a storytelling move. This is a story they'd like to tell the investors to somehow convince them that InvestView iGenius is still a player. All right. What about their risk matrix? Not looking good, folks. They have a substantial amount of subscriber churn. I did some calculations, and the best, happiest face that I could paint on it is that the churn rate annually is about 34%, more likely closer to 50%, and it may be higher in the worst case scenario. But the best case scenario is that of every 100 new subscribers, 34 of them are gone by the end of the year. Very highly dependent on crypto and capital needs. They've got a lot of problems in the medium term executing their products. They haven't done any in calendar year 2025, and they're at risk if they are unsuccessful in boosting their share price of losing their OTC listing. Now let's discuss a weird thing that they've reported every quarter that I've been reading their reports, and that's domestic versus foreign revenues. Over the course of the last couple of years, the number of subscribers overseas has been a increasingly large percentage of all of the iGenius subscribers. And then something happened in this quarter for the first time that I've been watching, and that is that foreign revenue fell, and it fell sharply from 10.3 million to 6.1 million. Domestic revenue increased from 1.4 million to 3 million. So the foreign share dropped significantly. Now, what are the causes of this? It could be that foreign recruiting is beginning to decline. There is almost certainly a high foreign churn rate and market saturation, particularly in the smaller foreign markets. And there's also some difficulties with their payment processor. I didn't go into detail about that. They have roughly $2 million in accounts receivable that they're unlikely to get from one of their phony baloney payment processors that has gone AWOL on them. Domestic revenue growth this is the best possible case scenario, may reflect increased U.S. Marketing and stabilization. On the other hand, we're talking about stabilization or slight growth of a very small number. The net effect is that the business is less foreign dependent than it used to due to foreign contraction, not domestic strength. And what does that mean? Unclear, but I'm going to speculate. I'm going to say that one of the possibilities is that iGenius's candle outside the United States is starting to go out. And that would be a very bad sign for the company indeed. So here are the trendline insights. Total revenue is declining. iGenius, which is the focus of this talk, revenue is decreasing significantly. I didn't go into detail about it, but they had a mining revenue increase, which was small. Again, a small increase in what was a diminishing number, so a small number, and their cash reserves are also decreasing. Not exactly the exciting place that Anthony Napolitano described in an interview a few weeks ago. Folks, your skills, knowledge, and experience are way too valuable to waste in an MLM. That's all I got. I'll see you in the next one.